us. We also have Mr. Srinivasan of Take Solutions online with us right now. So let's go across to him in terms of really talking about some of the current factors at play right now and the kind of growth they're anticipating in terms of order book as well going forward. Mr. Srinivasan, thanks for joining us. Now, if you look at the Q1 revenue, 90% of incremental Q1Q growth came in from the integration of the earlier acquisition of KI Research and Dataceutics. Do you see the organic business growing, where you've renewed the contract that you have with two large global pharma companies and perhaps acquisitions contributing Q2 onwards? How are you expecting things to play out?
Yeah, I think the organic growth this year should be around 18 to 20% is the organic growth that we anticipate, and along with the acquisitions, I think overall our revenue growth for the year should be above 25%. The order book has remained healthy. I think year on year we've grown at about 40% at the order book level, and that augurs well. So we're very close to now a 1:1 book to bill ratio, which is looking quite healthy.
The acquisitions have surely helped you gain entry in the US markets for clinical research services and, add some domain skills locally there as well. As you also enhance service offerings, what's the FY20 dollar revenue and growth that you're aiming?
Yeah, so see, in terms of capabilities, yes, I think we've added a couple of therapeutic areas, especially neurology. In terms of customer segment, we've added several federal agencies who were a part of the KAI research customer segment. So there's an overall strength that we've gained in the US market, and that's leading us to much larger RFPs. I guess the downstream effect of that these RFPs generally take anywhere between 6 and 7 months to close. So the downstream effect of these acquisitions will be really seen in FY21. Our dollar growth rate, I think we've had a compounded quarterly growth rate of about over 7% from over the last 16 quarters. I think that's been good. So the dollar growth rate will be quite significant compared to it'll be in line with the similar growth rates that we'd had last year.
Will the FY20 EBIT margin be lower due to the integration of lower margin units and a slight increase in costs for the organic business through operating leverage? Should that help improve things next year?
Yes, certainly. I think you will see the operating leverage go up as far as the Dataceutics acquisition is concerned, even in Q3 of this year. But the KAI acquisition, I think the impact of that will be seen only in FY21.
Okay. And what range are you aiming at in terms of growth numbers for the next 9 to 12 months?
I think the organic growth rate will be at about between 18 and 20%. And if we couple it with the acquisition of KAI and Dataceutics and give them a growth rate of about 10%, we should be safely past 25% for the year.
Thanks for joining us, Mr. Srinivasan. Well, guide. Mani, we were talking about the kind of move we're seeing in markets today and what